Hopefully you can see my screen. Great. Terrific. I've even managed to switch my microphone on. Very welcome to you. Lovely day here. Hope it's nice where you are. Hope you're all nice and safe. Staying safe in this, staying safe, if I can say it. Let's just drop that out of the way. There we go. I've started with the oil chart for a particular reason. I've just got my eye on the 15-second chart here. Top left, just while the price action's coming in, we've got a volatility trigger there. Another volatility trigger there. Nice long-legged doji. Perfect example of. Big spike in volume. Volume point of controls moves down. Okay, just see what, keep an eye on that. Obviously that's very, very quick. Price is breaking down. What I wanted to show you really was the 5-minute chart, and also to explain it in the context of the daily, which is something that we don't focus enough on in these rooms, and we should, because it is important. Even as an intraday trader, even if you're trading on very fast time frames, it is important, and this is the reason why. Because it gives you potential levels for areas of resistance, support, and as we always say, on time is the weighting factor, if you like, because the slower the time frame, the greater the weight. Any aspect of technical analysis will carry. So if you're trading multiple time frames, it doesn't matter what time frames they are, the slowest one on your window of opportunity, if we call it that, let's say you've got 3 or 4 charts up, your slowest chart is going to carry the most weight. And if you go out to the dailies, of course, they are going to carry the most significant weight of all, or the weeklies or the monthlies. But if we stay with the daily, and the reason it's so significant is purely because oil has been flip-flopping around this region for a long, long time. This is June, this is July, this is August. So virtually since almost the second week in June, we've been at this level and cannot break away from it. The volume point of control, we've had this level that's been tested around $42. It's tried to get through there repeatedly. It cannot get through. It's just crawling higher at the moment. It's really, really struggling. The volume profile is not huge, but then you've got to build into that, obviously, the seasonal aspect that we're in at the moment. So, that's always a factor. Yes, you've got a very strong level of support below here on the accumulation distribution indicator, but we're still trading around the volume point of control. Obviously, there's not just the technicals, there is the weakness in the dollar. And given what is going on with gold and silver, although there are other factors relating to the metals, but they have certainly been helped higher, obviously, by the weakness in the US dollar, which we've seen over the last few weeks at any rate. But that has certainly not helped oil. You would expect oil to be pushed up at the very least through that relationship, but it has not. There's a lot of politics involved here. There's a huge amount of oversupply, lack of demand, and then that's going to be impacted by OPEC at some point, because carrying on trading at these levels is going to become extremely painful for a lot of the OPEC members. But the point I wanted to make is really this, that when you have a daily chart up, it gives you views on levels. It also gives you views on what is potentially going to happen the day after, when you get particularly significant candles like we had, even this one, some buying coming in under there. We had decent volume. It's obviously all distorted by this candle over here, which was the big plunge into negative territory. So you've got to remember that and the way to get rid of that is just simply to scroll out the chart. And that then gives you a much better perspective on the differentials between the volume candles. So yeah, we saw some buying coming in that day. Nice wick, on the VPOC. So we're expecting a little bit of a rally, which we get. Then we get weakness yesterday. What have we got? We've got a wick here, tried to break higher. It fell back again. Good volume under that particular candle. So, what we're seeing today is hardly any great surprise. But the reason I wanted to show you that was really when you drop down onto the 5-minute chart. Just put that up full size. There we go. And it's really the sort of price action with the volatilities and everything else through onto this particular phase of price action up here. We had volatility candles. We've had that one. We went through that. We had another one here. We had another one here. Actually moved through there. Fine. Okay. So what we're seeing thereafter, we've got falling volume. Okay. So we've got narrowing spread. So that's okay. You know, it's not disastrous. It doesn't mean the rally's coming to an end. It just means it's weakening a little bit. The spreads are narrowing. So you've got this sort of arching effect and you've got volume falling away. That's fine. We get the next one. Okay, a little bit of weakness. I don't know whether the VPOC was actually at this level or not at this point. I couldn't tell you for sure. So we move on up, and then what we get is what I would suggest is an anomalous candle. We get the highest volume on the day, or on the chart at any rate, and yet the spread of that particular candle is not in line with what we might expect, given if that's our metric candle. In other words, if we look at that and say, well, that's a huge widespread up candle, how much volume did that take to get that amount of price action? Was this much? How come we've got 1.5 times that amount of volume, and yet we've only got maybe just over half the price action? So that's telling you that there's something amiss, there's something awry. This is not in agreement, this is out of agreement. We've got too much volume being driven into too narrow a price spread. You then get the follow through, which kind of reinforces that, because you get a wick to the upper body. You've got slightly less volume, but nevertheless a lot of volume, and that is signaling weakness. There has to be weakness in there. In other words, we've got some pretty hefty selling going on. The market is struggling to get through that level. And when you put that in the context against the daily chart, where the market's been trying to break through this region for a long time and is just constantly struggling to get any higher, you know, that piece of the jigsaw puzzle, if you will, becomes important. And even though you're on a 5-minute chart, you know, the daily chart, it has significance to you as a trader. So this is alerting you to the fact that there's some weakness here. We've had too much volume driven in here. We've had another low driven in here. We've got a big wick to the upper body, and it's not going anywhere. And then what we get is really confirmation of that in multiple ways. We get a long-legged doji. It's not indicative of reversal, it's just indicative of indecision. In other words, you've got buying and selling going on, and it's an equal tug of war, if you like. Then you get further weakness, another effort to rally, hits pretty much the same mark, good volume under there, it's weak. Tries to rally, what does it do? It's falling volume. You know, the volume's falling away. We get a bit more driven in here, then what do we get? We get a bearish engulfing signal. In other words, it's pretty much the same as this. So you've got price action, you've got selling price action over buying price action. You'll see you'll end up with a little body here and a nice big wick to the upper body on good volume. So if you planted this on the 10-minute chart, that's what you'd see. So basically, you've got weakness, indecision, weakness, weakness, another weakness. You know, couldn't be much stronger than that. Lots of volume under there, nice volume, you know, pretty weak. Then we get some three separate dojis, you know, indecision. Now, the question is whether you get in on any of these points, but the fact of the matter is that at the very least, this is a market that's looking weak. You can't pick precisely when it's going to roll over, but it's certainly giving you a clear indication of where that weakness is from a technical perspective at any rate. Certainly from, you know, this point here, you could pretty much put a ruler across those 5. So it's fairly self-evident where you would put your stop loss. It would be somewhere beyond 42.65 a barrel. And then it's a question of being patient. You might get in on 1 or 2 of these. You might wait. You might have got in earlier on. You might have jumped in earlier on perhaps these 3. But you know, it's all about patience and waiting. Once the reversal starts, then you start to see heavy selling coming in. You've got higher rising volume here. You get further confirmation of weakness with this trying to rally here. You've got another huge injection of volume here. You know, this effort to rally, and bang, down it goes. Then you get the volatility trigger, lots of volume under that one. Sorry, this was the volume here, apologies, that one there. Effort to rally, down it goes. Then we get a ton of volume coming into this one. Then on that particular volatility trigger, we do get the reversal into the spread of the candle, back down again, support, on off we go. And then we get an almost carbon copy, if you like, repeat at a slightly lower level. We get the rally goes. This doesn't look right because we've got, you know, if you go back and look at, you know, any of these candles, or even this one, and you look at the volume associated with it, and the volume is far too low. So you know for sure this isn't going very far because this price action is way out of whack with the volume. The other way around, if you like, the price action is too much, too little volume. That carries on, and then we get another big injection of volume up here again with a wick to the upper body, ton of volume driven into the candle. Is this strong or weak? It's weakness again. And in addition to that, you're coming up and hitting this level again. We've come in with more weakness here. So, another strong signal of weakness, tries to rally, big wick, narrow body, pivot to the upper body, tries to rally, a little bit of buying coming in there, pretty weedy. Where are we going? And that's the next question is, well, if you're going to jump on that trade, where is it going to go to? Well, it's not going to go very far. So if 42.40 to 42.28 is enough for you, fair enough. That may be sufficient in terms of your return on any trade if you're going to jump in a trade there, because for sure that you're going to get congestion building at this point. So is that enough for you? That's the question you have to ask when you jump in that particular trade. Is it enough for you? Because you have a pretty good idea of where it's going to get to. Yes, this carried on lower, but it got down here, it reversed, it went into the congestion phase. We had a 2-bar here, but it was in the congestion here, was where it paused. So it's not going to go straight through there. You've also got obviously heavy volume in under here, and before we get down into much lighter territory, down at sub 42 a barrel. So it's pretty heavy going through here. So for sure, this isn't going to collapse through here unless there's some political event or some geopolitical event or some fundamental piece of data that comes out. So that is another aspect. I mean, that is an aspect of pure trading, if you will, which we talk about a lot. It's identifying the opportunity that you're about to take in the market. You'll obviously be looking at this on 5. That's where the VPOC is on 5-minute. Where is it on 10-minute? Well, it's in pretty much the same place. It's just coming down to test it there. And of course, you'd also be looking at this in terms of the candles that were formed. And I'm not sure whether it was this one or this one, but one of these was the 2-bar reversal. I think it might have been that one, but I can't be certain without backtracking and going quick look at it. But it's a similar sort of pattern. So when you're trading in multiple timeframes, you're going to get similar sort of patterns. That's the weakness confirmed there again. Not much in the way of price resistance overhead on this chart, but you've got a very solid platform of potential support coming in here at 42.20, and you've got the VPOC again. So in terms of taking any trade other than scalping a few cents out of here on a very fast time frame, this is not a trade where you're going to sit in here for, well, anything longer than a few seconds, to be honest. You're certainly not going to be sitting in here for minutes, goodness forbid, hours. So I just wanted to make the point there. Let's just have a look at the 15 seconds, see what happened there. There we go. We had the volatility trigger, 1.5 tons of volume came in, and it reversed off there. So there'll be traders jumping in on that one. Got slammed again, got painful, got either taken out or took themselves out of the market. Now we're going back through it and back lower. Trend monitors confirmed all that for you. See what else is going on. Let's have a look up on the 1 minute. There we go. Okay, 1.5 tons of volume coming under there. Too much volume under there. That's just a huge amount of volume. It's when you see these anomalies, it should set the alarm bells ringing. This is unusual. This is not what you would expect to see. And to judge it, you just constantly eyeball over. You look at other candles, you go and look at candles, you look at the price spreads, you look at the spreads of those, the volume associated. We're in the same session here. This is all through, we've got an hour and a half up here. So, this is all fine. You just look at it all the time. You're constantly looking at it. The trend monitor's bright red, that's fine. The rally up here was pretty weak. I mean, look at that. You've got falling volume under a rising market, and it's pretty thin spreads as well. So that's not going far. They've got weakness coming in here, a little bit of buying coming in under that last one because the spread's narrower on there. But in terms of where the market's heading, if it was going to head lower, you've got a nice low volume node in here between, down at sort of 15, 17, and then back down into 10, you start to come into heavy water again. So, those are the things you're constantly looking at the whole time. It's just flipping around, just reading the charts, just seeing what's going on. You can see the buying coming in there, a little, decent buying under that candle. So it's going to reverse against you. It's inevitable, but the rally is weak. Market volume is falling, price is rising, ain't going far. That's okay. Trend monitor's red, trend monitor's red, trend monitor's red. So that's fine. We're seeing the transition in trend monitor here. You can see it. It's come out of its phase, up phase. Now we're in a transitional color. And basically, that is the way that You know, the sentiment in any trend, whether it's a pause, whether it's a reversal, whatever it is, it will ripple through from the fastest chart, happens to be 15-second here, but it could be 5-minute, 10-minute, 15-minute combination, whatever. It will ripple through on the trend monitor, trend monitor, trend monitor, trend monitor is starting to change here. No change on 10, and obviously on the daily. You know, that's way out of the spectrum. You wouldn't expect any change at all there.